let's gather more. Punita Kumar Sinha joins in on the show right now. Punita, hi, morning. Good to have you on the show. Where is it that you are joining us from? Which part of the world?
I'm joining you from the US.
Okay. So just wondering then, Punita, what do you think US would have in terms of news flow for us? Because January we'll have the Trump administration formally take over as well. What would it mean for India and the globe?
So I think we should expect some volatility going into 2025 because there are a lot of events, India specific as well as global, that need to be watched. So for one, President Trump is going to take over in January and he is going to make some announcements. He's a decisive leader. Whether those and what that means for the markets will be based on what kind of announcements he makes. There could be tariff wars that could lead into trade wars. There could be immigration reform. There could be certain alignments with different countries. There could be an end, he may try to put an end to the Ukraine-Russia war. So there's a lot of news flow that was probably likely to come out in the first quarter of his presidency. And that would be good or bad, depending on what those announcements are. So that's one. Then we have the Indian budget on February 1st. That is going to also decide how much stimulus is going to come from government capex, if that's going to continue or not. So I think those are the two major drivers. And then, of course, what happens with China is very important, whether the Chinese economy is going to improve or is going to face further stress from any tariff hikes that US might impose on China.
Yeah, lots of moving parts, and I think volatility is going to be the mainstay as far as 2025 is concerned. Hi, Punita, Anish also joining in the conversation. But as they always say that markets ultimately are the followers of earnings, right? What's the expectation as far as earnings from India is concerned? Because Q2 was disappointing. Would you call it the bottom, or do you expect downgrade cycles to just continue for a couple more quarters from here on?
So based on the data that we are seeing earnings estimates still mixed. Some companies are seeing earnings estimates flatten out in the sense that but in general, I would say the expectation is that the earnings are not going to be that great, and maybe similar along the lines that what we saw in this quarter. So earnings estimates are still trending down, but not as bad as they were earlier. I think markets have also corrected. If you look in the last 6 months, India has actually underperformed quite a few of the global markets and quite a few of the emerging markets as well. And that's in reaction to A, the higher valuation perception, and B, that the earnings estimates were also trending down. Now, I think the markets have corrected. So the earnings estimate trends, even if they're down somewhat, are being priced in. And so the markets may not react as negatively to the earnings as and when they're released, because some of the earnings expectation is already priced in.
That's the take on the earnings. Hi, Punita. This is Shrishti also joining in. Just wanted to take a step back and look back to the performance of 2024 and wanted your take that how this year panned out as per your expectation, as we are sitting right here at the last calendar year, day of the calendar year 2024. How was 2024 as per your expectations, and taking cues from this particular year, which are the big themes that you would like to ride on in the upcoming years?
Well, I think 2024 has been a great year for India. And the consistent performance over the last few years has really brought India on the global map for investors. So, but of course, also India has now developed this perception as an expensive market. Now, that has both good and bad ramifications. So on the good side is that a lot of companies now want to list in India, even global companies or companies with any kind of presence in India. If they have any India business, they find that they can get a better valuation in India. So some of them are actually thinking of delisting from other exchanges and listing in India. So that's one trend that I think everybody now, there's a global awakening of the Indian valuations and what that means for companies who want to list, or for private equity investors who want to list their companies. That means there could be a lot more supply, a lot more IPOs in India. The Indian exchanges will see a lot more listings. But that also means that with all of this supply coming on, that could create some valuation lid in terms of the market ability to take on this extra supply. And if you look at the recent IPOs that have come out in India, some of them, while after listing, they've performed quite well, and the oversubscription has been quite good. If you actually see from when they filed their prospectuses, at the valuations they filed their prospectuses to the valuations that they actually listed at, was much lower. So the domestic investors have started pushing back on the companies on the valuations that they want to list at. So I think everybody is now, becoming a little bit more discerning on and focused on valuations, and which is why we saw a correction. So while 2024 has been good, I think there will be a lot more focus on valuations going forward, and there'll be more discerning investors. And I think therefore it will be, and then plus on top of that, we have a new president in the US who's going to create quite a lot of announcements that could create some turmoil in the global markets based on what the announcements are. And that could also impact India. So my view for 2025 would be that focus more on India's own domestic consumption story and be invested in companies that are not as exposed to the global markets, given all of the turmoil that we might see from announcements that come out in the US. And also US yields are trending higher because of the risks, and uncertainty that could emerge. And so I think it's a year that you need to be flexible, agile, because these announcements could actually create value and opportunities as well, and could also create some stress.
A very interesting point that you made there, that a couple of these MNCs could actually, and now are actually looking to delist in some of the other geographies and make way for the India entry. But this particular year has been quite robust in terms of the new IPOs entering into the markets and the new companies entering into the Indian markets. But Punita, what I wanted to know is that what's keeping FIIs back from investing in coming ahead and putting the money in the Indian markets, and what can actually be changed in the overall environment to get these FIIs back into the Indian markets? What's your take on that?
Well, I think, as I said, the perception was or has been created across the world is that India is an expensive market, and the valuations in India are much higher than the rest of the world, which has kept some of the foreign investors a little bit on the sidelines. And then, of course, China valuations were much lower than the stimulus in China. And if you see now, China's, over the last 6 months, as I mentioned, China's outperformed India, and several other markets, several other emerging markets have also outperformed India. And if you look at across the world, there are many countries where the valuations are a lot lower. And so that's where the focus has been. But we also need to keep in mind that the risks are more to China going forward from President Trump's tariff hikes than to India. And therefore, foreign investors might start coming back to India, given that valuations have corrected in India, stocks have corrected. The market is now no longer at its highs. And also, I think the domestic demand and the consumption story in India is still strong and is going to be insulated to some extent from any of the trade wars that might emerge.
Punita, do you think the dollar strength will continue? Because a large part of the FI flows is all, currency linked.
Well, it's hard to say. It depends a little bit on how the policies shape out. At the moment, bond yields in the US have been strengthening because there is a concern still that this new era could be more inflationary than is expected. And if you look at the expectations and the probabilities of further rate cuts in the US, there's only an expectation of another 25 basis points cut in the next 6 months. So if the bond yields are going up and there are not no real rate cuts, the dollar could remain strong. But it's very hard to say what might emerge on the currency markets, and therefore it's prudent perhaps to diversify a little bit into, and we are seeing people diversify a little bit into gold, precious metals, even bitcoins. So there is a fear that maybe the US dollar strength might come to an end. But at the moment, based on what I'm seeing on the bond yields and on the rate cut probabilities, I'm not seeing any sudden drop. But again, President Trump could make certain announcements which could change the whole scenario.
Absolutely. The other thing I want to draw your attention, Punita, to is the RBI macro stability report. And, shortly after, the RBI governor announced that growth had actually retreated all the way to 5.4%, which was, I think, the lowest in about 7 odd quarters. While the Reserve Bank's forecast is saying that the economy is going to expand now by 6.6% in FY25, I think what the red flag is the fact that they're saying that commercial banks could actually witness a share in the rise of bad loans and that their capital buffers may actually decline in extreme stress scenarios. How do you think the landscape is looking like for, the financial sector right now here in India?
To me, I think financial sector is the backbone of the Indian economy, and it's very important for that sector to remain strong if we want to have growth, high quality growth sustained in India. If you see, the financial sector hasn't really done too well compared to other sectors in terms of the stock market returns. From a valuation perspective, the sector has already witnessed some derating because of all the RBI regulations and tightening norms and regulatory regime, especially on some of the NBFCs, the fintechs, etc. And so I am not as worried from here. I mean, there is valuation comfort, I think. So while always one has to be selective, I mean, there's definitely stress, but there's, US financial sector is also seeing the default rate rise in the credit card sector. So as the economies globally have slowed, there is some of that always happens. But if you look at the valuation and the risk reward, in my view, maybe if you're selective, I think financials could be okay. And they're also insulated from any global announcements that could affect any exporters.
Is the case because they are very, very domestic facing. Thanks, Punita, for making time and speaking with us. And here's wishing you the best in 2025 from all of us here.
And Happy New Year to all of you.
Thanks so much for that.
If you like this video, then like, share and subscribe to ET Now.